Hey everyone, welcome back to Corporate Decoder. Today, Tianci International Incorporated just filed an 8K report, and it looks like they are making a big move into Africa. Quick note, this is not financial advice, just my take on public filings for educational purposes. Tianci International is setting up shop in Zimbabwe, and this could be a game changer for their mineral products business. Alright, so what exactly is this filing all about? Basically, companies have to file this Form 8K with the US Securities and Exchange Commission, or SEC, when some important things happen that investors should know about. Think of it as a public announcement for big news. In this case, T.I.A.N.C.I International Incorporated, a company that trades on the NASDAQ under the ticker symbol C.I.I.T, has announced they are expanding their operations. This filing from the 24th of July 2026 details their plan to establish a new subsidiary in Zimbabwe. The main event here is clearly the establishment of this new subsidiary. The company states it will carry on their mineral products business in Zimbabwe. This is a pretty significant expansion, especially considering their current market cap is only around $4 million. A move like this into a new country, particularly for mineral products, suggests they are looking for growth opportunities beyond their current markets. Now, it is important to understand what a subsidiary is and why this matters. A subsidiary is essentially a company that is completely owned or controlled by another, larger company. So, Tianci International Incorporated is creating a new, separate business entity in Zimbabwe that it will own and manage. This is often done to manage specific business lines, enter new geographic markets, or even for tax or legal reasons. For Tianci, focusing on mineral products in Zimbabwe points to a strategic direction. Zimbabwe is known for its rich mineral resources, so it makes sense that a company involved in mineral products would look there. This could mean they are looking to source raw materials, process them, or sell finished mineral products within Zimbabwe and potentially the broader African region. Given that the company's business is described as integrated freight and logistics, and they have a small employee count of 13, this expansion into mineral products, specifically in a new country, could be a significant undertaking. It's a shift or a deep dive into a new significant sector. Let's touch briefly on their current status. Tianci International Incorporated's common stock is traded on the Nasdaq Stock Market LLC, specifically under the Nasdaq Capital Market. This means they are a publicly traded company in the United States, subject to US securities laws and reporting requirements. Their stock symbol is C.I.I.T. Recent news also indicates they recently completed a reverse stock split, a 1-for-10 split in July 2026. This is often done to increase the stock price and meet exchange listing requirements. However, it is a tactic that historically, for many small companies, precedes further challenges. The filing mentions that a press release dated the 24th of July 2026 is furnished as Exhibit 99.1. While the full details are in that press release, the 8K itself confirms the core announcement. What is particularly interesting is another piece of news from the 24th of July 2026, stating that Tianci's Zimbabwe warehouse is expected to store about 50,000 metric tons. This gives us a concrete idea of the scale they are planning for their new operations. Storing that much material suggests a significant volume of mineral products will be handled. This implies a substantial investment in infrastructure, logistics, and personnel within Zimbabwe. This section lists the exhibits attached to the filing. Exhibit 99.1 is the press release, and Exhibit 104 is the interactive data file for the cover page. This confirms that the main meat of the announcement is indeed in that press release, which we are getting a summary of here. The report is signed by Shufang Gao, who is the CEO of Tianci International Incorporated. This means the CEO is personally attesting to the accuracy of the information being filed. So, what is my take on this filing and the company's direction? Tianci International Incorporated is making a bold move by establishing a significant operation in Zimbabwe. Focusing on mineral products, this suggests a strategic pivot or a major expansion into a new industry sector and a new continent. The expected 50,000 metric ton warehouse capacity points to ambitious growth plans. Historically, companies with very small market caps like Tianci's, especially those undergoing reverse stock splits, often face significant challenges. About half of microcap companies that do reverse splits eventually get delisted. However, this expansion into mineral products might be an attempt to revitalize the business and tap into new revenue streams. The success of this venture will depend heavily on their ability to manage operations in a new country, navigate local regulations, and effectively compete in the mineral products market. The risk I am watching is whether this expansion is a calculated move to unlock significant value, or if it stretches their resources too thin given their small existing footprint. What I'm actually looking for is how this Zimbabwe operation translates into actual revenue and profitability in their future filings. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you like this breakdown, give us a thumbs up and subscribe for more insights. Join our Discord in the description below.